Don't overdo it. Just be honest and tell them what the deal is.
The media loves covering us. That has driven a lot of investors.
Education for us is critical.
And once you build that trust, 80% of investors coming back to reinvest.
And when things aren't going as planned, communicate as much as you can.
In this episode, discover the top capital raising strategies shared by leading founders, fund managers, and family offices.
Because a lot of the people attending are capital raisers, a few of the questions we were going to ask kind of relate to some of the best tools you've used to help raise capital, some particular strategies that you used as well. Is there a particular new technology or what has been very effective for you recently in raising capital from a tool or just strategy standpoint?
I mean, there's CRM tools that everyone uses and things like that, but I've found, and it's not just family office conferences, but I've found in-person events are the best way to talk to investors and have them. I think email has a 2-3% open rate. Text messages are slightly better, but if someone's texting you to raise money, they don't want to talk to you, right?
Right.
You just got to be in front of people and talk to people, and when you're talking to them about the prospects of what their capital can do, don't overdo it. Just be honest and tell them what the deal is. And we've done that. We've been very conservative in our estimates with people, and several of our investors, our largest investor just made a $2 million additional investment because he's started small, he's watched us grow, he's watched us do what we're doing, and we over accomplished what we said we would. Yeah. And that's the number one thing, is be honest with them and talk to them.
Develop that trust.
Yeah, it's the only way to do it.
So just building upon that, and I agree with everything you've said, we have an advantage that I didn't expect to have, and that we're weird. I mean, how many people here have ever heard of a cute, furry, adorable medical device before? The media loves covering us. We've been covered over 400 times by major media, so television, all the major online print publications, and that we were a Time magazine, including their best inventions a few years ago. That has driven a lot of investor traffic. So for those of you who are raising money out there, trying to figure out how to get the media to get interested in what you're covering, that can spread your story far and wide and get people that you won't come in contact with at conferences like this or through PitchBook or Crunchbase or all those other tools.
So I think for us, being in the oil and gas space, the biggest thing that we focus on with the people that we raise money from is education. People, especially, a lot of our investors come from real estate, and they want an idea of, okay, how does actually this work? You're going to go get oil out of the ground, you're going to sell it, who are you selling it to, and kind of all the stuff that goes into kind of a traditional underwriting. So we focus really heavy on education. In-person events, I definitely piggyback off that, are great because you can kind of look that person in the eye and see them. And really what we do is for every deal that we help co-sponsor, we actually go ahead and release kind of a webinar style video where we actually walk everybody through the underwriting process so they can kind of see the soup to nuts version.
Oh, that's great.
How we actually go about the underwriting process and kind of weave that in with the education. So
because you're kind of newer, as it sounds like, did you start just through the family office and the connections there and local, or did the education kind of start quickly after the kind of the decision to start raising capital?
Well, I think we stumbled, like everything, it's not the first strategy you stumble across, because you meet with investors, you learn what they're interested in, you learn, you figure out the questions that they have, and then all of a sudden it's like, okay, well, we're getting the same question over and over as, well, how do you know there's oil here? Well, okay, maybe we should tell people how we go about analyzing that. And that's kind of like the genesis of it from that standpoint. But it's really been what I would say is kind of network focused. Like you said, getting in front of people, one person introduces you to one person. The other benefit with oil and gas is the massive tax benefits you get with investing in it. And so one of the biggest target markets for us is CPAs. We get a lot of CPAs who we partner with who need something in their tool belt to be able to give to their clients who at the end of the year do need a tax write-off, and it may not be quick. There may not be a real estate portfolio they can get into. There may not be other, tax havens they can get into. And with oil and gas, it's extremely tax advantage. We were meeting with one of our largest investors this week, actually, before we flew out here. And one of the comments he had was, when I first got your pitch deck and I saw your tax slide, I was sure you were lying to me. And then I went and talked to my CPA and you weren't. It's crazy. So, stuff to hear like that's cool, but I would say education for us is critical.
And if you don't mind me asking again, with those webinars, is it something that is kind of one-offs, or is it, now that you've kind of developed a network, is it something where it's like once a week we have a webinar and it's to 20 people, or is it once a month, or is it once for one person and then continue that way?
So we do them evergreen. So basically, we record one, and then anytime we get a new contact or somebody interested, we kind of just send them there, collect their information, and they can kind of watch it at their own leisure.
Fantastic. That's great. Michael.
Well, we started first, we now have 5 profit centers, and we started with the charitable foundations. And if we could help enough people, they then decided that they wanted to come back. And then our second profit center was trade shows, because I've been doing them for 50 years. And that to me was by far and away the best face-to-face conversations that we could have. And if we could help them charitably, that was great. And then it just naturally, organically evolved into how could we invest? How can we do more? And in the trade shows, just like this show, we just got into the family offices about a year ago, and Fort Lauderdale was our first show, and then Beverly Hills, and this now as well. And I personally, though not an employee of the company, a partner, an investor, these last 6 years, take care of personally each and every communication. So it's not just from a corporate point of view, it's a true trust building, bonding, or since I was a certified senior financial planner, I don't think this is for you, basically. Or if you're going to get into it, no more than 5 to 10% of your portfolio. And once you build that trust, if we look at our investments that are coming in year by year over the last 6 years, it's about 80% of investors coming back to reinvest because they couldn't believe how really good it was going to be for them. And then we developed a concept which I hadn't heard of prior, and that was, since there is a little bit of risk to precious metals, the volatility, and to fine art, which a lot of people have not previously been blessed to invest in and are not sure of the liquidity or the exit strategy, we said, look, what if we can secure your entire investment, let's say $50,000, with your choosing fine art that you particularly like. So in the worst case scenario, World War III does happen, you will still have that fine art instantly, or as quickly as we can create it. And that was more of an innovative way to truly build the trust and make the risk-reward ratio much more in their favor. And by not being an employee and by being an advocate or an ombudsman, if you will, for that investor, I was placed in a position that I could actually not just present the opportunity, but represent them when we're negotiating with the company. And that's an eminent position for me to be in.
Yeah, that's great. It's really refreshing to hear you take it back from an initial as a certified financial planner. Like, how does this fit in to the overall asset class? I mean, to the overall allocation. So
Betcha. And we just 3 years ago, out of the 6, we started doing IRAs and 401ks.
That's great.
And previously, that wasn't even thought of. And then 2 years ago, people would come in and they would say, now that you're into precious metals, the 4th profit center, I have, and this just happened 3 days ago, dental practice, which you know very well. Your cousin, John, said, I've got 900 ounces of silver. Could you guarantee me that since you're going to create Michelangelo's David and pure silver? Could I come and see you actually take my silver and convert it so I can become part of history in the making? And I sent them a FedEx account yesterday.
Ah, that's funny. That's great.
How cool is that?
That's really cool. Thank you. Dan, yeah.
Capital raising for us has been focusing on the basics. Had dinner last night with Joe and Janine Williams, with Keller Williams, and similar strategy. They're 37 years now of raising capital. The first part, we just focus on having an extraordinary product and service, and then make sure that we've got an extraordinary team, and then expand. So we've got a national and then international client base. And then the fourth stage we're at now is then expanding locations around the country, particularly in places which our family like to enjoy, like Park City, Utah, where we like to ski, or that was last month. This month is Honolulu, where we like to vacation.
Yeah. When you think of like I said, it was interesting as someone who was in finance, to watch what you had posted yesterday. When you look at those different strategies, like if you take a minute and just, if you don't mind, kind of maybe say, how does the hedging work, or what do you do from a hedging perspective, I guess would be
Sure. So the niche that we're in is looking at trends quite differently than the typical portfolio is structured, where, as the analogy goes, who would buy a Ferrari, or any car for that matter, that just has an accelerator pedal but no brakes or skid control or reverse gear or turbo boost? So in answer to your question, as it relates to when all three of our primary trends are negative, then that's an indicator for us to invest in inverse ETFs.
Okay.
And so in 2022, for example, when the market was moving down, the S&P 500 lost 18% that year. Our trends for most of the year were negative in all three of those short-term, medium-term, and long-term categories. So we moved into leveraged ETFs, where then you can make 18% to 36%, depending on its 1x or 2x when the market's plummeting. And then also with the skid control, moving into investments like we're excited about energy as well. Energy was up 30 to 60% in 2022, and our portfolios automatically move where the trends are when energy is a great time to be investing in, as well as in gold.
Do you ever use overlays? I mean, do you do option overlays at all, or?
We're pretty straightforward with public securities, invested at the ETFs and stocks. That way, investors are always 100% liquid.
Yeah, nice. Great. Gideon, what strategies have been helpful from both raising capital and maybe new technology, anything new that has helped that way for getting investors into your fund? And granted, it's a new tech. I mean, I know the technology has been around for a while, but it's really advanced recently, is my understanding.
Yeah, and I think that, as it relates to helping find new investors, raising capital, I'll keep it simple, right? Like, on one side, regardless of where you are kind of in the value chain, whether you're a new sponsor looking to raise a couple $100,000 or an experienced sponsor looking for multi-millions of dollars from individual LPs or institutional capital, I think that it's a relationship-driven, it is relationship-driven, right? So I've heard my panelists talk about, speaking to investors and communicating with investors directly. Like, that is the case. I might not write every piece of content that goes out, but I probably take a quick look at it and it goes out in my name. I always say, like, I can't play the guitar and I can't break dance, but for some reason, people like and trust me pretty quickly, and so that can be a superpower. It can also be a power used by an evil villain, right? So I have to stand behind that and stand and really perform, and when things aren't going as planned, communicate as much as you can. We over-communicate in all of our platforms. And look, real estate hasn't had the best 18 months, right? So the more you can be out in front of your investors and letting them know that if business plans aren't going according to plan, like, what is the strategy, what is the pivot, what is the plan. You maintain trust, right? You don't pick a sponsor really. You do pick a sponsor when times are good, but you really end up learning if your choice was a good one when times aren't so good, right? How are they going to stand behind that? From a technology perspective, look, it's simple, right? ChatGPT for me has been a game changer for time, right? Like ChatGPT doesn't write my articles, but if I tell it what I want to convey, it gets me started on marketing materials. It creates platform after platform and structure. I did an explainer video for Charge Capital Partners. I needed to write a script. How easy is it to sit down and write a script? But I can tell ChatGPT what I need.
It's so helpful to organize your thoughts. It helps from a time perspective.
A huge jumping off point, right? So it just is saving a ton of time across the entire portfolio.
Would you remind me where, from a standpoint of footprint? I mean, where's your footprint, so to speak?
On the
energy side.
On the energy side, we're focused mainly in New York, New Jersey, and the tri-state area. To begin with, because we find that blue states seem to have a little bit of more of a limited risk, risk profile, as well as the arbitrage margins are strong here.
That's great.
Join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.